All right. Hello, everyone. Stream's getting on its way. We got the ECB decision here in about 13 minutes. Just getting myself organized. Let's see. Did not sleep too well last night. I got about, I don't know, 45-ish minutes ago. Usually I'm up for like a whole hour, at least like an hour and a half, 2 hours before these streams. So a little groggy, but I save my ass all the time whenever I have to do streams early. I save my ass because guess what? I come prepared. Right, we got our day ahead stuff. Yeah. So I will send this document right now to everyone in the trade group. Just give me 1 second here. I'm gonna export the PDF. And let's put it in the group notes in the trading group real quick. I can transition back now. Actually, there is one thing I can do. Yeah, that looks a bit weird, but at least now you can actually see the ECB countdown while I do this thing off screen. Yes, hello, Kitty Cat. Yeah, we have a friend here joining us for ECB. Okay. I know it looks like nothing's going on the screen, but I am doing what I said. I'm getting that document out to everybody. And we'll be covering it live on the stream. But I'm getting it to every trade group. Okay. All good. All good, all good, all good. And we can transition back to this view. All right, so this is the ECB Council meeting. So this is when they actually take questions and read out their rate decision and all that. Let's see, we need our financial juice, don't we? Bringing that boy over here. So you might notice in this web browser, I have a bunch of tabs open. That's because we're going to be covering quite a few things around the world between the rate decision, which comes in the next 9 minutes, and the press conference. There's about 30 minutes. And instead of just waiting out that 30 minutes like we did yesterday with FOMC, we're going to review the notes of just recent happenings that have occurred. And, you know, we'll get to watch, you know, a couple of really short videos, you know, discuss some political happenings. Just get caught up with things that are going on in the world. And we will start with Germany and France in order to focus on things that could be impacting the euro in the very near future. Speaking of the euro, this is where we're at. Whole lot nothing. Yeah. whole lot of nothing. Since FOMC, I mean, here was Tuesday. We came down. FOMC was this day, and well, we're expecting, if we look at our weekly notes here, the ECB is expected to cut, and they're expected to continue cutting. So the path forward for the euro should be something like this, based on if you're just interpreting the rate cuts. However, of course, life isn't always so straightforward. So let's go to the day ahead here. Yeah, we got 7 minutes still. Let's see. Government Council. Let's start going through some of this stuff. France seeks budget compromise to stave off government collapse. So we've been watching this in the Discord. I can pop this over here, and you can see that these are the group notes. Let's go to research form. And you can see, if we scroll down just a little bit, French National Assembly election. Boop. Click on that. And yeah, we've been following the developments with the French budget and how that might be impacting the French election. And also if the government collapses. Again, that's kind of something we want to know. So we're watching it. Let's see here. Handful of senators in the National Assembly, which is, you know, France's parliament, France's, you know, House and Senate. It's their Congress. All right. Oh, I should probably go into this. So there is this budget, and they're trying to pass a budget, and they were going to vote on it today. But then the prime minister, the party leader, right? Francois Bayrou, I believe I said that correctly. He went ahead and he posted this on X. So there was a 14-year-old boy who was robbed and then murdered. And he said some statements about, hey, we have to deport people. Then, in response to those statements, the Socialist Party responds and says, hey, the comments that you said when you specifically said migratory submersion, yeah, we don't like this, and we want you out. We will actually call a vote of confidence against you. So the talks between all the parties, specifically because the Socialist Party in France broke off the talks, is saying, hey, yeah, the flare-up, if we zoom in here, the flare-up over the comments by Bayrou, who said many French people felt submerged by immigration, underlines the complexity of his political balancing act. Yep. And the Socialist Party officials suspended their participation in protest over these remarks. So they're not helping with the budget anymore. So not looking great. Of course, I recommend just reading the full articles on your own. But this is like, okay, so the Prime Minister of France said something, the socialists didn't like it, so we're probably going to get in the near future a vote of confidence for the prime minister. Again, he's already survived one, and we will very likely see France kind of continue to tumble along here. Committee to meet on Thursday to work on compromise bill, but the committee doesn't have the socialists, so it's like, okay, is this actually going to work? Yeah, France's parliament split among three main camps. So you can see National Rally here. That, I believe, is Le Pen's group. The Republican right, Renewed and Allies, and then Popular Front. And then you can see the Socialists and Allies here in pink. And then, of course, the Greens, they're kind of working hand in hand with the Socialists a bit. Let's see here. Let's see, is there any particular thing? Yeah, they mentioned the vote of confidence here. Baru is expected to face a repeat of this sequence, getting faced by opposition groups. Let's see here. Opposition groups on the far left are poised to file a censure motion that, if backed by a majority, would reject the bill and force the prime minister to resign. That vote will likely take place next Wednesday. See, this is why it's important, because what happens if this vote passes next Wednesday to the euro? Like, don't get me wrong, this ECB rate decision is on the calendar. We have a countdown timer for it. And we've had tons of people give analysis on it, so that we can help set expectations sometimes months in advance for these events. I'm going to turn on the financial juice squawk because we're now a minute away from the ECB rate decision. But you can see why I'm saying, like, hey, if you're not keeping up to date with what's going on here, you can easily get blindsided on trading and the currency side. Because if this vote were to pass next Wednesday, so that would be here, right? If the censure, so the budget bill fails and he's told to resign next week, I mean, this is going to be a big fat red day. Now, on the flip side...
10 seconds.
Oh, all right. Let's focus on ECB decision.
Cut 25 basis point cut, 25 basis point cut to 2.9% as expected. Deposit rate cut 25 basis point cut, 25 basis point cut to 2.75% as expected.
Yeah, not a whole lot of movement.
ECB are to
right
lower
off
the
bat.
three key ECB interest rates by 25 basis points. They are determined to ensure that inflation stabilizes sustainably at its 2% medium-term target. They are not pre-committing to any particular rate path. ECB cuts marginal lending facility rate to 3.15%. Estimates were 3.15%. ECB says ECB today decided to lower the three interest rates. ECB says inflation has continued to develop broadly in line with staff projections and is set to return to ECB's 2% medium-term target in the course of this year. ECB says domestic inflation remains high, mostly because wages and prices in certain sectors are still adjusting to past inflation surge with a substantial delay. ECB says the ECB's recent interest rate cuts are gradually making new borrowing less expensive for firms and households. At the same time, financing conditions continue to be tight, also because monetary policy remains restrictive and past interest rate hikes are still transmitting to stock of credit, with some maturing loans being economy is still facing headwinds, but rising real incomes and gradually fading effects of restrictive monetary policy should support a pickup in demand over time. It will follow a data-dependent and meeting-by-meeting approach to determining appropriate monetary policy stance. In particular, ECB interest rates decisions will be based on its assessment of inflation outlook in light of incoming economic and financial data, dynamics of underlying inflation, and strength of monetary policy.
Yeah. Nothing unexpected.
So ECB traders keep ECB easing bet steady, seeing 70 basis points more this year.
All right, that's what we want.
And the euro dollar is unchanged after the ECB decision, down 0.1% at 1.0405. ECB saying underlying measures show inflation to settle around target. ECB adding wage growth is moderating as expected.
Alrighty. Keeping the Discord updated. So yeah, we'll probably see 3 or 4 cuts out of the ECB this year. A lot of analysts are expecting 4 cuts, but it's just not totally priced in. 3 cuts is like the more moderate expectation.
ECB adding past rate hikes are still transmitting.
Sure thing. All right.
Voice news disconnected.
Yep. All right, so this is the actual statement for the ECB. Hello, Ari. Yep. So we had ECB come out, they cut 25 basis points, and overall it seems like everything is exactly the same. Everything's coming out as expected, no crazy moves pretty much at all. Nothing crazy. Pretty straightforward. The real meat and potatoes is going to be from the press conference, which you can see we have a countdown for this. 25 more minutes. So between now and then, we're going to continue to review important things that we need to know going into next week. Because tomorrow's stream, we're going to be doing a week ahead stream. If I could, I can. There we go. Get shareable link. Boom, head back. I just put the link in the chat for tomorrow's stream, which is also the week ahead stream. All this stuff here, if you are in the trade group, you'll be able to see in the group notes a link to a PDF of the day ahead notes here. And I might not get to reviewing everything in the notes today, but all this stuff is reviewing political happenings, things to be aware of, generally speaking. These things might be very important. In some cases, they might only be moderately important. This was just news that I collected over like the last 24-ish hours since FOMC. But we are focusing, well, we already covered, I should say, I gotta turn down this music just a hair. There we go. I love the guitar riffs, but man, again, I don't want it overpowering my voice. All right. So, the Prime Minister of France said, hey, we just had this 14-year-old get killed by immigrants. We don't like that. He specifically made a comment that included this like, hey, the French people are feeling submerged by immigration. And when he said that, the Socialist Party said, hey, we really don't like that. We want you to be more immigrant friendly. And if you don't, I mean, the consequences have already hit, so it's not like they aren't following through on their threats. They are withdrawing from negotiations on the budget that's supposed to get voted for France today, France's government fiscal budget. They are supposed to vote in the Senate, and it's not going through. So it's going to either get delayed unless there's some kind of miracle and they pass it without the socialists. Because when they don't have the socialists, you know, if you look at this split, it looks like, oh, the socialists, they're just these people in pink here, right? Well, no, not really, because they have allies. So it's this whole segment over here. So these pink guys, these green guys, these orange guys, and these red guys, all for these people, 193 seats, then what's called the New Popular Front, all these people kind of take their shots from the socialists. So it'd be pretty hard for them to get the budget passed. And here's some icing on the cake. If the socialists get a censor motion passed by a majority in France, the bill would be rejected, the fiscal bill, and it would force the prime minister to resign. And when this vote takes place, when this risk could occur, is next Wednesday. So let's open our calendars and put that in. Wednesday, oh, there's shit going down in France. I really need to be watching the stream of this vote and watching the Euro next Wednesday. And from what I understand, next Wednesday is going to be pretty busy. No, I'm not sure if that's when we have the Bank of England meeting or not. I'm pretty sure. Here, let's go ahead and check for next week. Next week, next Wednesday. No, we have Canadian balance of trade. Oh, we have the final PMIs out of Europe on that day. And Canadian balance of trade and ISM services PMI in the US. And Australia balance of trade. Yeah, it's not a terribly busy day. A lot of PMI finals are getting released. Some import-export data. But this will probably be the big thing next week on Wednesday. And you will not see this on any economic calendar. Right? So I'm just drilling that in. So France is kind of in the crack right now. It's not doing good. And there's more risks. However, Germany is improving politically. The CDU and the AfD are actually potentially going to start working together. Germany's opposition conservatives won parliamentary approval on Wednesday for a proposal to drastically restrict immigration or migration with the help of votes from the AfD, breaking a taboo on cooperation with the far right. So, Merz, the guy who's in charge of the CSU, is keen to seize the initiative on migration policy. I believe, yeah. So this is Weidel saying hey, Scholz, who's the current chancellor of Germany, you're doing a really bad job, and your Socialist Party is not helping Germans. But look, the CDU is helping us. Get in line. And this is just a more general, hey, here, what are the risks for tariffs against Europe that could be coming from the US? Let's see. I mean, I'll go ahead and say, if you've been watching so far, leave a like, make sure you're subscribed, all that jazz. And we still have, let's see here, how much time until the ECB meeting? We still have about 17 minutes until the press conference, until the Q&A and the speech. So, if anything I'm saying, you know, got any questions about it, free to answer. Again, my energy is pretty low today because I usually have like an hour and a half, 2 hours to wake up and do stuff. But I kind of rolled out of bed today. However, because I already prepared all this stuff, I can just kind of go down this list and say, oh yeah, I know exactly what I'm supposed to be doing. Yep. And that's why I always try and write my notes the day before. Like, okay, the day before. You know, that's actually kind of an important part when you do want to be a good trader. If you're not constantly looking at the future, if you're not constantly thinking about how things today are changing things tomorrow, right? The whole future expectations thing, right? But I mean, actually taking the effort to do things also outside of outlooks. It's like, hey, Joe did this very nice day ahead report, and he got all these links. You know, I'm not trading Japan, so I'm not going to look at this stuff. I'm not trading Australia, so I'm not going to look at this stuff. I'm trading Euro, I'm trading US, so I'll watch this stuff about France and Germany. I'll watch the stuff on Panama. I highly recommend the stuff on Panama. Actually, right over here, this is the Wikipedia page for the Panama Canal. And this is the little segment that we have on Wikipedia for all of the Trump admin's policies on the Panama Canal. Just this whole segment right here. That's it. And we have this explainer, you know, going over the motivations of the Trump administration with the Panama Canal. And then we have this great video from the great channel, What's Going On with Shipping. Highly recommend it. This is in the Discord chat. It's in, I believe, it's in the economic. Right there. Panama Canal. So yeah. And also France's GDP is in the toilet. What's new? TSL and Amazon reported bad earnings. How's the S&P? S&P should not be doing well if that is the case. I mean, it should be doing fairly all right, but yeah. Let's see. 14 minutes. All right, so let's get through the Germany stuff. So the AfD and the CDU are starting to cooperate, and the socialists really don't like that, but the socialists are incredibly unpopular. Merz has accused the SPD and the Greens of blocking what he calls a necessary turnaround in asylum policy after the arrival in recent years of millions of asylum seekers fleeing war and poverty in the Middle East. Now, I have to preface this. Before Merz came around to more publicly working with the AfD, I have to point this out here. So if we go to our German Federal Election Research tab, there was this huge letter that Weedle posted. Let's see here. Yeah. So just like in France today, there was a kid who got killed last week. A kid and a man who was defending the kid and the woman from a knife attack from an immigrant. And so this is Mers, the head of the CDU. I called the Chancellor, the SPD, the Socialists, the Greens, and the FDP. Follow your words with actions. Next week's session gives you a chance to do so. The population has the right to know, whether parties are serious about immigration control. And where is the big fat letter? Yeah, you can see at this moment, as we meet, ladies and gentlemen, perpetrators like those from yesterday talking about this knife attack are walking around freely in Germany. We will put an end to this situation. And there's this big fat letter from Weedle. Look at this. Saying, hey, Mers, there was this crazy thing. You're basically stealing our immigration policy. Please cooperate with us, or else we will take your whole party. As a state political responsibility, I therefore appeal to you. Let us take the necessary decision without further delay in order to put into practice what the citizens now rightfully expect from politicians. The coming week of sessions in the German Bundestag offers an opportunity for this. It must not be wasted. The majority is there for this. My group and I are available to you, Mers, at any time for a coordinating decision. Regardless of this, I am ready. Looking forward to our TV discussion on the pressing political issues of our time. Yeah, and we were covering this when it came out a week ago. A little more than a week ago. This was last Thursday. So for people who say, oh, political stuff, you can't trade that, or, oh, you can't trade macros. That's, in my opinion, kind of short-sighted and, I want to say kind of stupid, but it depends on what you're doing, really. Like, if your strategy is like a statistical arbitrage, or just if you actually know what you're doing, if you actually have some kind of measurable alpha in your strategy, and it requires no analysis of these risks whatsoever to maintain its profitability, then okay, you know what, go for it. But for most guys who aren't spending all day in front of the computer trading, being aware of these kinds of developments is extremely important in order to, for example, see if the long or the short that they're currently in should be held for another week or two. And even though there's this, cooperation, it doesn't mean that this cooperation is going to be long-term, right? Also note, Mers wants to be Chancellor of Germany, and he could very easily get it if he has the backing of the AfD, and the AfD is the smaller party, which they still currently are. The CDU has about a 30% approval rating polling. So if they go into the next election here on the February, 23rd of February, they'll likely still be the biggest party. Oh. Yep. We are getting... Yeah, we still have 10 minutes. We still got about 10 minutes left before the ECB comes out. ECB press conference. We'll just pop that over here. And mute that and put our music back on. Yeah, there we go. So yeah, political happenings are important to follow. It's just, these are things that have happened in the last 24 hours, and, you know, it's good to review and say, oh, you know, check this out. Here's what we've actually been doing in the trade group. Hey, check this out. These are free research forums that you can follow. A link to actually get to these research forums and those threads. And actually, we just, I believe we have announcements. Yeah, we have a few announcements. We have a couple of new threads. We have the announcement for the Trump Watch thread, announcement for the US Panama Canal retake thread, right? So this is going over that video with Selma Caliano, and I might have said that incorrectly, but this is going over like, hey, here's what's going on with Panama, and this is where you can get updates on US Panama negotiations and relationships. And then we have immigration policy of the second Donald Trump administration. So there are a couple of research threads that are immigration related, but this is one specifically on, okay, there's a bunch of places we could potentially post immigration stuff, but this is like, okay, you have Trump Watch, which is all breaking news. As soon as something new from Trump comes out, it goes in here. And then we can look at, okay, any news from there that was immigration related, we can just forward it over here, or any commentary or analysis talking about it, we can send that over here. And there's actually a running count on Wikipedia of how many arrests have occurred so far in this administration. And they've arrested, based on the numbers, 5,500 people. And then we had this thing on Guantanamo. Again, there's another thread, Mexico-U.S. border crisis. So, you know, there'll be other stuff posted that's Mexico specific here. And then there's the Mexican drug war, and this is everything cartel related. Goes in here. And, you know, I'm maintaining these threads, so it's like, okay, if anyone actually cares to contribute and watch these threads as well, all well and good. It's more or less for my own sanity, because if I'm following a particular topic, I just want to make sure I can find all the information relevant to that topic as quickly as humanly possible without, you know, scrounging around a huge long history in a single channel like this geopolitics channel. Like, whenever there's breaking news, people post stuff in here, and that's all well and good. Generally speaking, if you're in this Discord server, I kind of don't care if you're precise with posting stuff in the right channel, just wherever you think is the right spot, and then we can forward it. And if it's in, like, you know, if you're posting meme videos in the economics channel, I'm just going to delete it. So it's like, you'll know there's a problem if I tell you there's one. That's the nice part about having a smaller Discord. Okay. We are still 5 minutes away from the press conference starting. So yeah, political happenings going on. And then Trump tariff threats. We can go through this. Let's see here. Leaders, including Scholz, the Chancellor of Germany, who's also the head of the Socialist Party, Emmanuel Macron, who's the Prime Minister of France, and Denmark's Frederiksson, which I believe is also the Prime Minister of Denmark, have jetted across the continent, the European continent, since Trump's inauguration to discuss how to deal with risks posed by the new administration in Washington. Ah, man. Again, waking up so early and having this little energy going into the meeting. I mean, the meetings already aren't that energetic, already are pretty boring, so it's like, just getting my day started here. Still, kind of a groggy morning for me. Oh no. Yeah. Again, just kind of waiting out the last 5 minutes here going into the ECB press conference. And we can turn this on now and turn the music off because we're like 2 minutes away or something. Yeah, 2.5 minutes, roughly. So let's go ahead and put this battle boy back. And let's make our chart nice and big. That should do. We'll see Lagarde come in here shortly. Too many memes before bed, yeah. So the ECB press conference is imminent. We're going to be listening to Lagarde pretty much recite the monetary policy decision here. So she's going to recite this, and then it's off to Q&A, which will be the actual important part of the day. How does she respond to all the fancy questions that people have for her? Yeah, we'll definitely be doing more charting in the stream tomorrow. And the link is there in the chat if you want to set up notifications for tomorrow's week ahead prep stream, where we'll be covering economic and political events for the week ahead and using the indicators I've developed to do a little bit of trade planning. No, they don't have a tie thing. I think there is something like that, but it's not called the tie theory. It's like a dress theory. It's like depending on like what little frills Lagarde is wearing, people try and interpret whether she's going to be hawkish or dovish based on what she's wearing. The tie thing has been around for a long time now, but not as many people follow what Lagarde is doing. The ECB is pretty straightforward most of the time. Same thing with the Fed, at least recently. Oh, this is 30-minute chart. We want 30-second chart. We want to see the immediate response out of the ECB. All right, here she comes. And all the reporters stepping in. Yep, no frills. Looks like she's just wearing blue jacket. All right, she should be starting any moment.
Good afternoon and welcome to our press conference with President Lagarde and Vice President de Guindos. And my name is Wolfgang Preußel. We have also journalists participating via video link. As always, in case they ask questions, please connect your camera and unmute. And with that, I hand over to President Lagarde, please.
Thank you very much. Good afternoon to all of you. The Vice President and I welcome you to our press conference. The Governing Council today decided to lower the three key ECB interest rates by 25 basis points, in particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. The disinflation process is well on track. Inflation has continued to develop broadly in line with the staff projections and is set to return to our 2% medium-term target in the course of this year. Most measures of underlying inflation suggest that inflation will settle at around our target on a sustained basis. Domestic inflation remains high, mostly because wages and prices in certain sectors are still adjusting to the past inflation surge with a substantial delay. But wage growth is moderating, as expected, and profits are partially buffering the impact on inflation. Our recent interest rate cuts are gradually making new borrowing less expensive for firms and households. At the same time, financing conditions continue to be tight, also because our monetary policy remains restrictive and past interest rate hikes are still transmitting to the stock of credit, with some maturing loans being rolled over at higher rates. The economy is still facing headwinds, but rising real incomes and the gradually fading effects of restrictive monetary policy should support a pickup in demand over time. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So looking at the economic activity. The economy stagnated in the fourth quarter, according to Eurostat's preliminary flash estimate. It is set to remain weak in the near term. Surveys indicate that manufacturing continues to contract, while services activity is expanding. Consumer confidence is fragile, and households have not yet drawn sufficient encouragement from rising real incomes to significantly increase their spending. Nevertheless, the conditions for a recovery remain in place. While the labor market has softened over the recent months, it continues to be robust, with the unemployment rate staying low at 6.3% in December.
Okay, it's really like that.
A solid job market and higher incomes should strengthen consumer confidence and allow spending to rise. More affordable credit should also boost consumption and investment over time. Provided trade tensions do not escalate, exports should support the recovery as global demand rises. Fiscal and structural policies should make the economy more productive, competitive, and resilient. We welcome the European Commission's Competitiveness Compass, which provides a concrete roadmap for action. It is crucial to follow up with further concrete and ambitious structural policies on Mario Draghi's proposals for enhancing European competitiveness and on Enrico Letta's proposals for empowering the single market. Governments should implement their commitments under the EU's economic governance framework fully and without delay. This will help bring down budget deficits and debt ratios on a sustained basis while prioritizing growth-enhancing reforms and investment. Looking at inflation. Annual inflation increased to 2.4% in December, up from 2.2% in November. As in the previous months, the increase was expected and primarily reflected past sharp drops in energy prices falling out of the calculation. Along with a month-on-month increase in December, this led energy prices slightly higher on an annual basis, after 4 consecutive declines. Food price inflation edged down to 2.6% and goods inflation to 0.5%. Services inflation edged up to 4%. Most underlying indicators have been developing in line with the sustained return of inflation to our medium-term target. Domestic inflation, which closely tracks services inflation, has remained high, as wages and some services prices are still adjusting to the past inflation surge with a substantial delay. At the same time, recent signals point to continued moderation in wage pressures and to the buffering role of profits. We expect inflation to fluctuate around its current level in the near term. It should then settle sustainably at around the 2% medium-term target. Easing labor cost pressures and the continuing impact of our past monetary policy tightening on consumer prices should help this process. While market-based indicators of inflation compensation have largely reversed the declines observed in the autumn, most measures of longer-term inflation expectations continue to stand at around 2%. Looking at the risk assessment now. The risks to economic growth remain tilted to the downside. Greater friction in global trade could weigh on euro area growth by dampening exports and weakening the global economy. Lower confidence could prevent consumption and investment from recovering as fast as expected. This could be amplified by geopolitical risks, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, which could disrupt energy supplies and further weigh on global trade. Growth could also be lower if the lagged effects of monetary policy tightening last longer than expected. It could be higher if easier financing conditions and falling inflation allow domestic consumption and investment to rebound faster. Inflation could turn out higher if wages or profits increase by more than expected. Upside risks to inflation also stem from the heightened geopolitical tensions, which could push energy prices and freight costs higher in the near term and disrupt global trade. Moreover, extreme weather events and the unfolding climate crisis more broadly could drive up food prices by more than expected. By contrast, inflation may surprise on the downside if low confidence and concerns about geopolitical events prevent consumption and investment from recovering as fast as expected, if monetary policy dampens demand by more than expected, or if the economic environment in the rest of the world worsens unexpectedly. Greater friction in global trade would make the euro area inflation outlook more uncertain. Looking at the financial and monetary conditions now. Market interest rates in the euro area have risen since our December meeting, partly mirroring higher rates in global financial markets. While financing conditions remain tight, our interest rate cuts are gradually making it less expensive for firms and households to borrow. The average interest rate on new loans to firms declined to 4.5% in November, while the cost of issuing market-based debt remained at 3.6%. The average rate on new mortgages edged down to 3.5%. Growth in bank lending to firms rose to 1.5% in December, up from 1% in November, amid a strong monthly flow. Growth in debt securities issued by firms moderated to 3.2% in annual terms. Mortgage lending continued to rise gradually, but remained muted overall, with an annual growth rate of 1.1%. Credit standards for business loans tightened again in the fourth quarter of 24, having broadly stabilized over the previous 4 quarters, as reported in our latest bank lending survey. The renewed tightening mainly reflected banks becoming more concerned about the risks faced by their customers and less willing to take on risks themselves. Demand for loans by firms increased slightly in the fourth quarter, but remained weak overall. Credit standards for mortgages were broadly unchanged after 3 quarters of easing, while the demand for mortgages again increased strongly, mainly because of more attractive interest rates. In conclusion, the Governing Council today decided to lower the 3 key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. we will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. And in any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we are now ready to take your questions. Thank you.
First question goes to Balazs Korani of Reuters. Balazs, please.
Good afternoon. Thank you for taking my questions. First question is about the future. Where do we go from here? Are you still confident about the direction? Your fellow board member, Isabel Schnabel, said we're getting closer and closer to the point where you need to have a discussion about how much further rates can come down. Did you start having the discussion today, and what's your own view on this point? Second is about the neutral rate. Speaking in Davos, you gave a slightly different range for your neutral rate estimate than in the press conference here. Why did you change the estimate? Why did you lower the midpoint? What is the significance, or if there is a significance, of this change?
Thank you so much for your two questions. First of all, I just want to remind you that by lowering by 25 basis points today our three interest rates, and particularly the DFR, we have now cut down by 125 basis points relative to the high level where we were. Number two, there was no discussion as to whether this decision was appropriate or not. It was a unanimous decision. So all governors supported the decision that was articulated by Philip Lane this morning of cutting by 25%. You will have seen in the monetary policy statement clearly stated that at this point in time, we are still in restrictive territory. And we have not had a discussion, because it would be premature at this point in time, about the point where we have to stop. We know the direction of travel. You've mentioned it in your question. And this is the direction that we will take. At which pace, with what sequence, what magnitude, will be informed by the data that we will collect in the coming weeks and months, and by the analysis that our staff will conduct. We are lucky that for our next monetary policy meeting in March, we will receive a projection prepared by staff, which will be informed by the economic environment as it unfolds, and we will have, in the meantime, 2 additional readings on inflation. Those are data points, granted, but a series of inflation readings are informing those decisions. On the on R*, natural interest rate, you will be pleased to see in 8 days, on February the 7th, a publication by staff on the revision of the natural interest rate. And, you know, this is not something that we have discussed. As you know, it's a range, and it's a range that has, that does not give a guidelines or a destination. It's an indication, and it's in many ways a conceptual principle that is elaborated by a number of models, and that's what staff will publish and will comment upon. So you'll have plenty of it to elaborate upon.
The next question goes to Annette Weisbach of CNBC. Annette, please.
President Lagarde, thank you very much. I have a question on the economic outlook. You're saying that you're expecting that experts will contribute positively to economic recovery or activity, but if you look at the uncertainties in that world, how much do you think actually this is something which is realistic, given the slowness in China, given the Trump administration? That would be my first question. And my second question is whether, given that bleak economic picture and also the disinflationary trend and these restrictive monetary policy stance, why didn't you discuss or 50 basis points cut? Thank you.
Well, I can reassure you right away, we did not even utter the two numbers 50. So 50 was not in the debate at all. And as I said, there was rallied support unanimously by all members of the Governing Council for 25 basis points. Your question on exports, it's an interesting one. We took the precaution in the monetary policy statement to refer to export as a potential engine for growth. Not the main one, but an additional one. And we took the precaution to say, if I recall, provided that there is no trade or additional trade friction, something along those lines. So that's in the economic activity paragraph. And then we talk about exports yet again in the risk section. And we clearly analyze the trade environment, the framework within which trade takes place, and the uncertainty associated with it as a potential risk. But obviously, there are rumors, there are statements, there are assumptions, but we don't have anything that is, clear, tangible, and can be inserted into the analytical work that staff does. So we will be looking very carefully at the numbers that come in, the information that sort of consolidates, and obviously staff will incorporate all that in the work that they are going to do for the March projections. I'm not sure that there will be, by March, enough certainty to actually be very confident. I think we will still be plagued by uncertainty in that respect, and there will be more to come. But as it comes, we will be taking that into account.
And the next question goes to Mark Schroers of Bloomberg. Mark, please.
Yes, thanks a lot. The first one is on inflation. Your confidence in reaching the 2% target is very much based on the expectation that wage growth and services inflation will slow down significantly. That hasn't materialized yet. Services inflation is still around 4%. At what point in time do you need to see hard evidence in a slowdown in services inflation to continue cutting rates, let's say, beyond March? And the second one on a completely different topic. Your Czech counterpart yesterday said that his institution will assess including Bitcoin into foreign currency reserves. And US President Trump has backed the idea of a national strategic Bitcoin reserve. What do you think about such ideas? Is that something the ECB is looking into? Thanks.
Well, thank you very much for your two questions. On yes, we are confident that inflation will reach our target in the course of 25, and that's 2% medium term, sustainably so. And you are right that there is one particular item which is still resisting. The others are moving down. When you look at goods, when you look at non-energy industrial goods, when you look at subsets of all that, it's definitely moving down. And I have said in previous press conference that when goods are going down to 0.5, we're not going to expect that services will be at 2, because we would be clearly undershooting. But services, and in particular, if we look at the various underlying measurements, the domestic one, the one that strips out anything that has to do with exports, is still resisting. And that's actually gone up a little bit, because on services, we were at 3.9, we moved to 4. We're not data point dependent, but we look carefully at services. And we know that, those services are largely labor intensive, with or without contact. We used to have that distinction in the COVID time. We have less of it at the moment, but it is largely wage, labor intensive, and as a result, wage sensitive. We try to measure and to understand wages as much as possible, because it is so relevant for services. And all the indicators that we have at the moment are heading downward and are are confirming our confidence that wages in 25 will be going down. Whether you look at compensation per employee, which is quite a useful and relevant indicator, whether you look at the wage tracker that we have, whether we look at Indeed, whether we look at the ratios of vacancy to unemployment, all of those indicators are heading in the same direction. We're not celebrating that, but we are taking note and acknowledging the impact that it will have on services. Some of you will remember that I've also and we have focused on the distinction between the newcomers and the latecomers. We took, for instance, a particular review and deep, tried to have a better and deep understanding of those latecomers that waited for a period of time until they decided to hike prices. That is clearly the case for insurance companies, for instance, that do not increase their prices on a monthly or quarterly basis, but they generally wait until the expiry of a contract and then they hike prices. So we will be very attentive to how the latecomers, which did hike prices in January to March 24, whether this process under which they caught up with inflation is going to be duplicated this year again. We don't think so. And we do a corporate telephone survey, the result of which you will see tomorrow because we publish tomorrow. But our understanding from the corporate telephone survey as well, because we ask them, how do you see negotiations taking place? And when do you expect increases? All of that is heading in that direction. So it gives us the confidence that wages are they were down, and therefore will impact the price of services, and that we will see a declining movement in the course of 25. We don't expect, I think we say in the monetary policy statement that in the next couple of readings will still be resistant, if you will, largely because of base effects on energy prices. But from there on, we see this declining path in the course of 25. But once again, we don't look at one data point or one, it's not just compensation per employee. It's not just negotiated wages. It's the combination of it all, because it's a complex matter, depending on member states, depending on collective bargaining agreement and their renewal, all of that. On this matter that you referred to, and whether reserves of central bank should or could include bitcoins, I think there is a view around the table of the Governing Council, and most likely the General Council as well, that reserves have to be liquid, that reserves have to be secure, that they have to be safe, that they should not be plagued by the suspicion of money laundering or other criminal activities. And as a result, I'm confident that reserves will not enter, that bitcoins will not enter the reserves of any of the central banks of the General Council. I had a good conversation with my colleague from the Czech Republic, and I leave it to him to make whatever announcement he wants to make, but I'm confident that he's convinced, as we all are, of the necessity to have liquid, secure, and safe reserves. Thank you.
And now, Aude Kersolek of BFM Business, French television. Aude, please.
Thank you, Madame Lagarde. Are you comfortable with going on cutting rates, whereas the Fed had stopped? What impact do you foresee? And second question, if tariffs are introduced, do you think monetary policy will have to adapt immediately, or is it necessary to wait for the impacts on activity? Thank you.
Well, thank you very much for your question. I'm comfortable with one thing. We are comfortable with one thing, which is to reach our target. We are mission-driven. We want that 2% medium-term sustainable, and we will do everything that is required in order to reach that goal. So, as I said to another colleague of yours earlier on, under the baseline that we have, and with the data that we have received, we can comfortably indicate that we are directionally on this downward slope, pace and sequence of which will be determined by data and will be decided on a meeting by meeting. And for those who would like to have this solid forward guidance, it would be totally unrealistic to do anything of that nature, simply because we are facing significant and probably rising uncertainty at the moment. So this is what we have to do. And we continue to be guided by this sort of threefold analysis, which includes the inflation outlook, the underlying inflation, and the transmission of monetary policy. So are we comfortable doing what we have to do? Yes, absolutely, because we are mission-driven. The second question you had related to tariff. You know, as I said earlier on, for the moment, there is nothing that we can actually capture in terms of policy determination, in terms of numbers, in terms of scope, in terms of, you know, custom line items to understand exactly what is considered. When that happens, then of course it will enter into our assessment and into the macroeconomic analysis that is produced by our staff. But you know, it's far more complicated than it's this way or this way. It's inflationary or deflationary, depending on whether there is, you know, one set of decisions with variable rates around the world, rerouting of trade, whether there is retaliation or not. All we know for sure is that it will have a global negative impact. A global negative impact.
And the next question goes to Silvia Bazzoni of Class CNBC, the Italian TV channel.
Good afternoon, President. Good afternoon, Vice President. So in the statement you mentioned headwinds and GDP released this morning, of course, were below expectation, especially for France and Germany. So is the recovery delayed, and how long will it take to come out of stagnation? And the second question you were mentioning before, since December, long-term yields have gone up significantly following especially Treasury sell-off. And this besides the economic divergence between the EU and the US. So are you worried, and how are you assessing the situation? Thank you very much.
Sorry, worried about what?
The yields that are going up.
Oh, yields.
Yeah.
Okay. So is the recovery delayed? First of all, there is recovery. I think that's the first thing that we have to keep at the front of our mind. We went from a very low 23 to almost double the growth in 24. Now, granted, it is not at potential yet, but it's certainly a recovery. And given the job market, given the real income increase, we have good reason to believe that consumption will pick up and will continue to support this recovery process that we expect to continue. We never talked about stagflation. Q4 was stagnation of growth, but it's one quarter. If you look at the whole year, it's a different story. So, recovery there is. Stagflation there is not. Inflation is going down, and we have recovery. Will it be delayed? We shall see. As I said, it's a process that is ongoing, and that has been quite something in the course of 24. So the yield increase, whether you look at the short end or the long end of the curve, yes, it has increased, and it's a global process. It has been predominantly in the United States, but it has spilled over across the world, and the euro area has not been spared of those spillovers. It's largely attributable to spillovers from the US, not only. Partly because of energy prices, but also for other reasons. There is probably less of a downside risk expectation concerning inflation on the part of the markets, which probably explains partly this yield increase. But as I said, largely spillovers, partly Euro-specific. But it doesn't stop our monetary policy from transmitting quite materially. When I look at the decline of interest rates for corporates, the decline of interest rates to households for mortgages, it is really channeling through into the economy. And when I look, for instance, at the consumer survey and their intention to invest, there is clearly an added demand on the housing sector, for instance. So more to be seen on that front, particularly fueled by lower interest rates.
And now Olaf Storbeck of the Financial Times. Olaf, for you, please.
Thanks a lot. I have a few questions on the natural rate debate.
Not few.
Few. Can you give us any idea of your views on how the ECB will decide when we are there? So conceptually, will you just take the mid-range of the staff forecast, or have you already discussed how to determine that? And do you have any views on the question, as we are getting closer to the level, wherever it is, will the reaction function of the ECB have to change in terms of, do you have to act more slowly or kind of take more time to see how monetary policy actually works? Thanks.
It's a nice question, but let's face it. We are currently restrictive. We are not at neutral rate. This is a debate that is entirely premature. When we get closer to that, we will operate on the basis of a staff research paper, on the basis of the analysis provided by staff, and then that will help us determine how close we are and what our monetary policy stance should be. If you're asking me today whether we should go below neutral rate in order to stimulate the economy, I cannot tell you that. That's pretty obvious. We decide meeting by meeting on the basis of data, and we are not pre-committing to any particular pace. So how could I tell you if and when we arrive at this conceptual principle of the neutral rate, what we will do afterwards? This is going to depend on the data that we receive.
Stefan Rechius of Handelsblatt. Stefan, please.
Oh, by the way, we will be also, I know staff is going to work very hard on models, but we will be looking at all sorts of information, intelligence, the famous reference to looking out of the window. We will also be looking out the window.
Thank you for the floor. Here I am.
Hi.
Hi. You had a dinner guest on Tuesday evening, which, if I'm not mistaken, was the first time. Could you walk us through the exchange with Ursula von der Leyen and what you talked about and how it feeds or fed into the deliberations of the Governing Council? And my second question, if I may, is on the withdrawal of the Fed from the NGFS. The timing was delicate, just days prior to Donald Trump taking office. Did this exit surprise you, either in substance or in timing? Did you expect it, and what does it mean for global cooperation of central banks? Thank you.
Well, thank you for your two questions. President von der Leyen honored us with her presence at dinner on Tuesday. She was not the first one to attend what I, very immodestly called the president's dinners. Pascal Donoghue, the president of the Eurogroup, had also attended one of our dinners. And it was a very rich experience, which all governors felt could be repeated with other guests from around Europe. So I was particularly grateful to the president that she came, despite the crazy agenda that she has. Let's face it, this week is particularly heavy for her, and she managed to come. It gave us a chance to understand better from her exposé, her remarks, what exactly the Commission was going to focus on in terms of competitiveness, in terms of simplification, in terms of keeping the goals but being flexible on the approach, And I think that she was herself, but she can speak for herself better than me, pleased with the exchange that we had, because it took the form of her explaining the policies considered by the Commission in order to restore the competitiveness, in order to incentivize innovation, in order to eliminate some of the red tape, and so on and so forth. But it was also a chance for her to hear from the governors what their concerns were, and to check facts and policy recommendations. So it was, in that respect, really really an interesting dinner. And there will be more of those, as I have other guests up my sleeves, which I'm not going to disclose at this point in time. Now, you asked me a question about the withdrawal from the NGFS. The NGFS includes, I think, over 150 countries around the world. We are an active member of the NGFS. We actually provide the scenarios that are used by the NGFS and most members, and we see huge value in this multilateral, comparing of notes, comparing of scenarios, comparing of risks, comparing of policies. I think in this day and age, having a multilateral setting where these issues can be debated and analyzed is of great value. I'll stop here.
And the last question today goes to Elena Savova from the Bulgarian news agency. Elena, please.
Thank you. Good afternoon, Madam President. I have two questions. First, you mentioned rising real incomes. How far is this process gone, comparing the levels the pre-pandemic levels? And my second question is related to Bulgaria. Bulgaria is preparing to ask for extraordinary convergence report. Do you have recommendations for easing this process? And eventual extraordinary convergence report, would it be focused mainly on the technical criteria for entering the Eurozone, or it will take a more comprehensive approach about policies, about legislation again, like the released in June?
Right.
Thank you.
I beg your pardon because I missed the first part of your question. The second part I registered on Bulgaria, the convergence process and all that. But on the first one, what was it?
The real incomes.
Oh, real incomes.
Yes.
Okay.
How far are they gone comparing the pre-pandemic levels?
Yeah. Okay. Okay. So on rising real income, it's a fact, and in many member states there has been a complete catch-up with pre-pandemic levels. What has been different from pre-pandemic levels is the level of savings. And the level of savings has increased, has varied over the course of time, but in net terms has increased. And we very much hope that if confidence can be restored, particularly in view of a degree of anxiety and uncertainty about European political development, for instance, that consumers and investors will restore their previous pattern of consumption and investment. On Bulgaria, there is a convergence process that is well advanced. We are marginally involved in the process because we do not pass judgment on anything else than convergence towards inflation, and we look at the fiscal position and the sustainability. But on those fronts, and from what I have seen and the discussions that I have had with the Bulgarian authorities, I'm confident that this process is going well, and the special convergence report that has been asked by the Bulgarian authorities will, I suppose, it's not my decision, it will be determined by the Commission, will proceed so that they can be a review of all the criteria, not just inflation, but all the criteria that Bulgaria has to satisfy. So I'm only giving you a partial answer because the rest can only be given by the Commission.
Thank you very much. That concludes our press conference today. We will be back on the 6th of
All
March.
right.
And until then, I wish everybody all the best. Thank you.
Pretty uneventful. The lack of super clear forward guidance was stressed. So, nothing crazy. let's do a quick review. So we had a run-up and then a pullback. And it seems like now that the press conference is over, we're continuing this pullback. And on the day, in a flat day, whole lot of nothing. Well, I could go through this stuff now. But now the stream's been going on for an hour and a half, and we still have the week ahead stream tomorrow, which, I can go through and round down like, okay, here's the handful of things that I can cherry pick that are really, really useful. There's actually this stuff here. There's a lot of Bank of Japan stuff. A lot of Bank of Japan stuff that's been coming out. And I've posted those in the central bank's channel, I believe, if I'm not mistaken. These two opinion pieces from Bloomberg. Yep. Right here. BOJ to slice almost $500 billion off their balance sheet. And Japan sees debt service costs jumping 25% by 2028. So a pretty boring ECB meeting. Came in, like pinpoint exactly as expected. Well, time to start thinking about the week ahead. I'm sure I'm going to start getting a bunch of research for the week ahead. And as I do, you'll be able to see it in the Outlooks channel. So over the next 48 hours, we're going to start getting commentary for the week ahead and the risks for the week ahead. And I'll go ahead and end the stream. It's been nice. Thank you all for watching. Tomorrow's stream is going to be more charts focused. So I hope to see you all there. In a bit, guys.